So in this video, I'd like to go over problem 420, and this is shows differences between the fund accounting journal entries for tax levies and collections, and your general purpose financial statements, government-wide financial statements. Of course, general fund journal entries will follow a modified accrual basis, and government-wide financial statements will follow accrual basis of accounting. What's interesting about this particular case is that this is one situation where the differences between the two methodologies are not going to be huge, at least for the majority of journal entries. So, very first journal entry says there's a tax levy of 6.6 million and 2% were not collectible. Alright, so for the modified accrual basis of accounting, we're going to record a tax receivable current, right, and the amount of the levy, which in this case is 6.6 million. Alright, we're going to record an allowance for uncollectible taxes. Current will be 2% of 6.6 million, $132,000 in this case, and revenues for the difference. Now, how is this journal entry going to be recorded for general purpose for government-wide financial statements? Well, the debit to tax receivable will be the same. Allowance for uncollectible current taxes will also be the same. And the only difference is instead of revenue, we're going to say general revenues. Remember, taxes are always general as opposed to program. So there's going to be general revenue property taxes. So there's a slight difference in classification, but otherwise economically, in substance, the entries are almost the same. Alright, so this was first journal entry. Second journal entry, collect taxes of $5,795. Alright, so of course you receive cash in the amount of $5,795. And you created tax receivable current for that amount. This is for modified for the fund financial statements, and this is exactly identical journal entry for government-wide financial statements. All right. The next one is collection of delinquent taxes. Now, I didn't mark it in its Excel spreadsheet, but in the books it said collected $53,000 of delinquent taxes, $4,800 in interest and penalties. In delinquent taxes, these amounts had been recorded before in deferred inflows of resources of prior year. So, we received cash for the sum of $53,000 plus $4,800, which is in this case $57,800. All right, you need to credit, in this case, tax receivables delinquent for 53,000, right? Because it's collection of delinquent taxes. You credit interest and penalties receivable. Which is in this case 4,800. This is one part of the entry. The other part of the entry is to reclassify the revenue back from deferred financial resources, inflows, of resources, unavailable revenue, back to revenue. Right? Because remember, if this was delinquent, it was at some point classified as deferred inflows of resources, unavailable revenue. In this case, whole amount gets reclassified, re-recognized, if you will, as revenue. Right? That's what you do for the fund accounting. Now, for the government-wide financial statements, still get cash of 257.8. That doesn't change. You still credit tax receivables delinquent to 3,000, and you still credit interest and penalties receivable. So nothing changes here. There is no reclassification of entry from deferred inflows of resources for the government-wide financial statements, because we don't do that. We wouldn't have reclassified this revenue at the point of delinquency to deferred inflow of resources. What happens for the government-wide financial statement, just like it happens for any accrual basis of accounting, you have the allowance for uncollectible revenues. Just because revenues become delinquent doesn't automatically mean they won't be collectible. So you won't do anything until you may end up having to write off the receivable if you never can collect the taxes or anything like that. But that doesn't happen until later. The whole point here was deferred inflows of resources. Reclassification occurs at some point just as a result of the delinquency, not necessarily because of possible uncollectibility. Because even if it's delinquent, it can still be collected. The decision on uncollectibility would have to happen sometime later. All right. Then there is an entry on imposition of penalties and interest in the amount of 7,500, but only expect to collect 6,200. All right. So in this particular case, what you do is you debit interest and penalties receivable, in the amount of, in this case, 7,500. You have to recognize the allowance for uncollectible interest, penalties, in the amount of the difference, which would be 7,500 minus 6,200, and you have revenues here of $6,200. Right? Same journal entry for the government-wide activities. The only difference will be is that we'll mark revenue slightly different, as we know. It will be called general revenue, and we're going to mark it interest and penalties on delinquent taxes. Right? So, difference being that, of course, and again, for the government-wide financial statements, we'd like to make distinction between the general revenues and program revenues. Taxes, of course, are, as we learned earlier, general revenues. All right, so finally, the last journal entry, which would be the journal entry 5, reclassified uncollected taxes as delinquent. These amounts are not expected to be collected within 60 days. All right, so how much taxes did we not collect? Well, just uncollected taxes, the amount is, we started with the levy of 6.6 million here and only corrected 5795. So and then we also collected 53,000. Right, sorry, I just realized I made a little typo here. This should have said 5975, not 5795. So as I was looking from the book, I typed it incorrectly. So it's 5975. So what's uncollected in the end of the period is 6.6 million minus 5975. The $53,000 of delinquent taxes collected here relate to some other taxes delinquent from the previous levy. So what's uncollectible is 625. I mean, what's delinquent is 625. The 625 needs to be reclassified, of course, as tax receivable delinquent. 125,000. Automatically, we need to reclassify any allowance for uncollected taxes current need to be classified as delinquent as well. So in this case, it's 132,000. Then we have tax receivable current credit because it's being reclassified as delinquent. So that's 625,000. An allowance for uncollectible taxes delinquent. Oh, I should say uncollectible, not uncollected. That's a reclassification entry here. What's the journal entry going to look like for government-wide activities? Well, it's going to look exactly like this, like we have here, for this. But for the general fund, we need to not forget to reclassify revenues as unavailable. So so how much revenue is unavailable? Well, you need to take the original amount of revenue recognized, 6,468 in this case, and subtract from that subtract from that what was collected, which is 5975, and that gives us 493,000. But also remember there is this $6,200 of interest and penalties from the revenue from interest and penalties, which also no longer is available. So we need to add that on here, and then that end up being, we need to reclassify 499,200 is to deferred inflows of resources unavailable revenue. Right, 499,200. So that's what we do here. Of course, this journal entry we don't make a similar journal entry on the government-wide side because of what we discussed earlier. It doesn't apply. So anyway, so this is the problem 4-20.